The Bank of Botswana met last week Thursday and decided to keep interest rates exactly where they are at 5.5% with absolutely no change. Most people heard about this and just continued on with their lives, but you shouldn't be one of those people. Good morning. The name is Kilo Kwafetse, one of the voices that are shaping economic intelligence within Botswana's policy environment. So this is effectively what it means for you. If you have a mortgage or you have a car loan, those are not going up at the moment because the central bank has actually told the commercial banks locally that they cannot actually increase their lending rates, and that directive is still in place. So your monthly payments would still be in place. But here's the thing. Inflation is currently sitting at around 10.7% right now, and that means the price of everything that is around you that you actually buy on a month-to-month basis actually twice the amount that the bank actually considers to be normal. So your food, your fuel, your transport, your medical aid contributions, those costs unfortunately do not wait for a rate decision. So everything else is actually quite expensive at the moment. So there's actually a part that nobody's actually explaining at the moment. So part of the reason why rates are high at the moment and the bank is not raising them any further is actually very interesting. The inflation that we're currently experiencing now is not because Botswana is actually spending too much money within the economy. It is actually because things cost more to produce and move. So fuel prices are going up because of global tensions that we are seeing in the Middle East. Transport fares obviously followed. We do have this foot and mouth disease that is actually disrupting our food supply across the country, and medical aid contributions as well have went up on their own. So you cannot fix that with an interest rate, unfortunately. Raising rates only works when there's actually too much money chasing too few goods. So demand and supply basically. And that is not what is happening here. So the bank held the rate at 5.5%, which is actually the right call in my opinion for now. So one of the things that should actually concern you more as a Motswana is that the bank actually projected that inflation will actually average just about 9% this year, and will probably start coming down a bit to just about 5.5% in 2027. The interest rate is also currently sitting at 5.5% coincidentally. And that means for the next 12 to 18 months, your savings are basically losing value in real terms. The bank is actually paying you less than what inflation is taking away. And that is a quiet cost that nobody talks about at some of these press conferences that they keep holding. And they actually don't invite regular Botswana like you and I to come and contest some of these decisions. Perhaps in conclusion, the rate hold at 5.5% was actually the right decision. But unfortunately, and I do hope somebody at the Ministry of Finance and somebody at the bank, at the central bank, is actually listening to this, monetary policy is being asked to do a job that needs the whole government behind it. We cannot operate in silos, unfortunately, and we do need some of these fiscal policies and monetary policies working hand in hand together such that we do work towards a common goal. The fuller conversation into this analysis is what I'll be covering in my next edition of the Capital Brief. I would put in the link somewhere in the comment section so that we as Botswana can have a voice and can have a full understanding of what is actually happening within our economy and do something right about it. Thank you and have yourself a good week.